The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to Admiral Markets webinar, Price Action Trading School, and Fibonacci Retracement and Expansions. My name is Nenad, and today I will show you how to draw properly Fibonacci retracements, how to place Fibonacci extensions or expansions, and that is also part of the confluence which we'll be, of course, covering during our price action trading school. I hope that you are all right. We had a great Australian dollar trade. Unfortunately, as you could see, GBP dollar hit our stop loss from recap, and then it went 100 pips in a profit. So it sometimes happens, but well, it's up to us to manage our risk. But price action is what ultimately matters, and price action is the ultimate method for making good profits in Forex market. So before I begin, as always, our standard is disclaimer, explaining that online education materials are available by Admiral Markets as Estonia for a global audience. We should take into consideration that information cannot be and is not suitable for everyone. If you want to get corresponding information, you should contact Admiral Markets Global, then select your country and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And Admiral Markets UK Ltd takes no responsibility for information accuracy. This is my opinion, and Forex is risky business. You should know that. By opening an account with Admiral Markets, you can get up to 50% bonus on deposit. You can also have access to Admiral Markets Supreme Edition, and definitely you're trading with officially best MT4 broker. So today's agenda will be introduction to Fibonacci Fib ratios, universal connection, the power of Fibonacci. I will explain also why Fibonacci is that powerful. Then Fibonacci retracements, double Fibonacci's, and Fibonacci expansions. Okay. Now, introduction to Leonardo Fibonacci or Leonardo Bonacci will be very short because we have a lot of work to do. Quickly said, Mr. Leonardo was an Italian mathematician, well known in his age. In that time period, he was one of the greatest mathematicians in the world. He also presented Hindu-Arabic numbers and numeral system in his book named Liber Abaci. He also presented us with a sequence of numbers well known today as Fibonacci sequence. Fibonacci did not speak about the golden ratio, guys. It was Greeks who firstly introduced us with golden ratio. Many of you probably don't know it, but it was Greeks indeed. Okay, so I will just explain that throughout the history, the ratio for length to width of the rectangles of 1.621, 39, 49, 84 has been considered the most pleasing to human eye. And that ratio, golden ratio, was named by the Greeks. In the world of mathematics, the numeric value is called phi, which is named for the Greek sculpture Phidias. The space between the columns in famous Greek constructions form golden rectangles. There are a lot of golden rectangles throughout this structure, which is found in Athens, Greece. Okay, so guys, Pantheon, also some forms of Parthenon, sorry I said Pantheon, Parthenon, and some forms of Acropolis incorporate golden ratio in its structure. So definitely it was Greeks. It was not Fibonacci who talked about golden ratio. Now, Fibonacci sequence of numbers are 1, 1, 2, 3, 5, 8, 13, 21, 34, 55. Okay, those are logical sequence numbers. How I see it, as you know, I have talked and debated a lot about it. we are all universally connected, and the power of these numbers also lie in past plus present equals to future. Okay, 1 plus 2 equals to 3. Past plus present equals to future. Okay, now 2 plus 3 equals to 5. 3 plus 5 equals to 8. Okay, all that sequence coincidence is that basically it's looking at the past with attaching a present number will give you the future number. Okay, and previous present number becomes past number, and future number becomes present number, which produce another future number. It's like that in Forex market also. Because when you're looking at historical price action, and when you're observing historical behavior of the price or behavior patterns, you will spot that in Forex market price often repeats itself. Because of that, we are saying that past plus present equals to future. In Forex, Fibonacci numbers are used to calculate targets and entry points. Also, you can use it for placing stop losses. The first two numbers in Fibonacci sequence are 1 and 1 or 0 and 1, depending on the chosen starting point of the sequence. And each subsequent number is the sum of previous two, a logical number. How ratios are derived? For example, 13, 21, 34, 55. 13 divided by 21 is 0.68, which is a golden ratio. That is why some traders use 1321 MA crosses. Then 34 divided by 21 is 1.681, 618. 21 divided by 55 is 0.38, and so on. So ratios are usually divided between those numbers. 61.8 is golden ratio. But I personally deem that 88.6 is very, very important number in Forex market. Another important ratios are 127, 61, 161.8 and 261.8. Okay, we use Fibonacci retracement when we want to enter or add to position in trending markets. We have already learned about the trend. Now, Fibonacci is a part of the confluence. Mugas is asking how can he use Fibonacci for day trading. The thing is, you use Fibonacci in confluence. That is how I use it. I don't just watch Fibonacci numbers and base my targets on. I use it for confluence points. Okay? So basically, Fibonacci's are only used in my analysis and trading only as confluence points. Karen is saying he does not use Fibs. He has some wins, some losses. Ilya is saying that he basically, no, Ilya, you are on time. You didn't lose much of the webinar. First 10 minutes, but you can see it. It will be uploaded. So guys, Fibonacci you cannot trade just based on Fibonacci numbers or Fibonacci sequence. You always need to pay attention to confluence points. That is what we will cover during the course. And all of you guys who are basically watching this webinar for the first time or this series of webinar for the first time, sorry, I'm a little bit of cold. You need to know that this course will last, Price Action Trading School will last for a full year. Okay, so pay attention to this. This is step-by-step lesson guide. Okay, we are doing it step by step. So we use Fibs as confluence points. Goran, for example, is saying he cannot imagine trading without Fibonacci. Indeed, it's very important, especially if you do swing trading. Let's say 4-hour time frame trading. I showed you, and I will show you, why I had 72.00 and 72.30 Australian dollar long. It's a big part of the confluence. I will show you that later. You could have made almost 60 pips with that trade. So guys, yes, sometimes you will lose the trade, sometimes you will win the trade. But well, overall, we are positive. Winning euro dollar, winning Australian dollar, losing dollar yen, it doesn't matter. We need to stay positive. And there is always one rule in Forex trading, guys. That is my personal rule, which I have learned from my friend, basically, who is also an equity trader, and he does it professionally. He is full-time equity markets trader. He told me back in time, and I will always remember that advice. Even when I started to trade, when I started to be recognized as a trader, analyst, back in time, he told me, always trust your own guns. There is no matter, there is no who is wrong, who is right. Always trust your own guns. So basically, I do that often, and I do that. That is why I can show my real account statements to anyone who is interested for a cooperation, be it a course, be it as a student, whatever. I have proofs. So basically, you will have losses, you will have wins, but overall, you should stay positive. And that is why we should always strive to learn, because ultimately, guys, Forex is much about risk management. Risk management, not just making money, not just making pips. It's nothing if risk management is not correct. Everything will fall apart if risk management is bad. Remember that, and believe me, that is the ultimate truth in Forex market. Okay? So this was what we talked about for all of you who are joined at this present time. Okay? So retracement, which is a part of trend trading, and that is very important part of trend trading, is loss of momentum. It's a correction in trend environment. Okay, that is a correction in trend environment. Do not look retracement as trend reversal. It is not. That is basically just a loss of momentum. And if you observe 88.6 Fib reaction, you will see the power of 88.6. At this present time, after we finish the webinar, I want you really to practice drawing Fibonacci and observing 88.6. By observing constantly this number, it will get into your head, under your skin, and you will start to use it. And then you will be very grateful to me, because this is what is Fibonacci about. It's not just golden ratio, it's great. But this is, in Forex market, this is the number. 23.6 Fibonacci ratio is a very weak support line. It only bounces from 23.6 in strong trends. I call it a shallow retracement. But if you see a big, strong trend, it's not uncommon for the price to bounce off 23.6 Fib. If you see that happening, guys, you know that the trend is strong. So you can turn to scalp mode, because you cannot place a position trade within this number. You need a bigger retracement. But for scalping, there is an indication that you can indeed go with the trend. So 23.6 marks a very weak support line, but it also marks a very strong trend, whereas you can basically turn into a scalping mode. 38.2 is the first important line of support. If the market breaks this point, it's a sign of stronger momentum loss, and that retracement is underway. So if you see that 38.2 is broken and the price is trying to reach 50, that means that we have a really momentum loss, which is great thing indeed, because then you're waiting for positional trade within the boundaries of 50, 61.8 up to 88.6. Okay? Yes, for all time frames. Davor is asking, does this count for all time frames? Indeed, but the higher the time frame is, the better. Of course, H1 and H4 is optimum for intra-day, intra-week swings. Carolyn is asking, if price retraces from between fib lines, do we take that into account as bouncing? Yes, always. But you need to find other confluence points, Carolyn. It's not just about Fibonacci. 61.8 is the golden ratio. Okay, 50%. Some people say that this is not the actual Fibonacci number, but traders use it because it's based on Gantt Theory. And Gantt Theory says that market often bounces from 50% of retracement. So that is a natural support. 61.8 is the golden ratio. It's deemed to be the strongest of the support lines. But guys, in Forex market, this is indeed powerful number. But so far, even more powerful is 88.6, in my opinion. Golden ratio is deemed to be the strongest of support lines. So if the price jumps from, it usually will jump from 61.8, but if it retraces deeper, it will go to two deep retracement levels. First deeper retracement level, level 1, is 78.6. Second level for deeper retracement, level 2, is 88.6. The number, my favorite number. That is often the level for stop grabbing and fooling the wise traders or fake out trades. Carolyn is asking good question which answers this paragraph here. He's asking, if price gets past 88.6, does it mean the trend is over? Usually yes. It can make a double bottom then jump, but usually yes. 88.6, in my opinion, is the last level for placing confluence points. There is the ultimate resistance or the ultimate support for the price in that particular time frame. The last line of defense, indeed. 88.6, level 2, is the number. I'm telling you this now, and I have been observing the power of 88.6 during last couple of years. And the only thing I can tell you guys, it's that powerful. 100% you can look for double tops and bottoms, but break of that point is used for breakout trading or reversal confirmation. Okay, because 100% is never used in positional trading, at least how I do it. You can only spot double tops, double bottoms, and if it breaks, we can go with breakout trading. Golden ratio is omnipresent, guys. 78.6 and 88.6 are deeper retracements within a trend. 78.6 is a square root of 0.618. 88.6 is a square root of 0.7864. Now, if you have watched my webinar about high momentum trading, which will be the part of price action trading, as that is a part of practical naked trading which I developed 5-6 years ago, you will learn again how to trade exactly from 78.6 and 88.6. When we cover high momentum trading within price action trading school, you will see the power of Marubozu candles with only these two ratios. It is that powerful. 78.6 and 88.6 are correctional moves. If the price jumps of 78.6 or 88.6, it's deeper retracement. The old rule of forex trading says the bigger retracement is, the bigger the trend move will be. You have noticed a lot of times that price action goes up, and then heavily retraces to the downside, usually following these two ratios. And then when traders think, great, I will go short because this is short trend, no, it just does the opposite. It goes even more to the upside. It is that powerful. Those are correctional moves within the scope of universal connection. Even Gantt, a famous mathematician, a famous creator of Gantt Theory, which is also a mentor of Mr. Murray, who developed Murray math. Basically, he used Leonardo da Vinci's pictures when he was in the process of developing Gantt Theory. These are some of the sketches which Mr. Gantt used in his theory. Okay, look at this, guys. Look at Mr. Gantt teaching. This is just 1% of what he did in the past. These numbers, how these numbers are derived from, and of course, everything is universally connected. Squares, roots, triangles, human body, human mind. Guys, even our galaxy, Milky Way. Milky Way is a spiral galaxy. We are the part of Milky Way. We are so small, when you watch Milky Way galaxy, you can find it that we are somewhere around here. Our solar system, with all the planets, is located here within this huge number of stars and planets, billions. Milky Way is our galaxy. And yes, chocolate Milky Way, basically the name of the chocolate is derived from our Milky Way galaxy. Our solar system, including all our planets, is located here, somewhere there. And look at this. Now, Milky Way is a dot in observable universe, as we know of it. 13.8 billions of years. And guys, look at the spiral of Milky Way. What do you think? Is it 61.8 or some random number? It's a spiral. And most of the spirals have 61.8 within themselves. It's the power of universe, is the power of 61.8. Past and present gives us possible future outcome. 1 plus 2 equals to 3. Now observe these numbers. This is Fibonacci sequence. Past, present, here, equals the future. Okay. Now 2 plus 3 equals to 5. Previous present is past. Previous future number is present. And this is a future. And we can go like this almost infinitely. Power of 61.8, 78, 98 is within the nature, within our solar system, within the universe. Spiral arrangement of leaves and other plant parts. The Parthenon's facade as well as elements of its facade. Leonardo da Vinci's paintings incorporate golden ratio. This is also proven fact. Milky Way galaxy. And now remember the first lesson. Historical versus now moment price action. Historical versus now moment will give us the future. What we are expecting. Positive outcome. Okay? This is the part of my teaching. This is the part of my analysis, guys. I cannot open my charts and just do a random trend line as to say analysis for analysis. I want to provide you always with biggest possible truth behind the analysis. Where is the entry point? POC. Where is possible target? Where is stop loss? Many analysts stay from that. They won't do that because they're afraid their analysis is not accurate. A lot of them are afraid that the price can move against themselves. It's true. Yes, price can move from our perspective to our dimension, to hitting our stops, even proceeding further. But that is not what we should do. We should not be afraid of the price. We have our opinion. We can be right or wrong. But the thing is, if you know what you should look at, you will be really you will be braver to take a position, to enter a market, to manage that position. Because the price repeats itself. Historical versus now moment. Remember the first lesson. Caroline, you need to be patient. We will talk about extensions. Now, guys, power of Fibonacci golden ratio can be found in hurricanes, shells, faces, DNA molecules, seed heads, pine cones, even tree branches, guys, even tree branches. Okay? Seed heads, for example. The head of flower is also subject to Fibonacci process. Okay? Seeds are produced at its center, so they are basically expanding. And they migrate towards the outside to fill the space. Sunflowers present great example of these spiraling patterns. Okay? In some cases, the seed heads are so tightly packed that their total number can get quite high, as many as 144. And when you count these spirals, total tends to match Fibonacci number. Guys, this is the truth. Pine cones. Seed pods on a pine cone are also arranged in a spiral pattern. Each cone consists of a pair of spirals, each one spiraling upwards in opposing direction. Okay? The number of steps will almost always match a pair of consecutive Fibonacci numbers. Tree branches. Fibonacci sequence can be seen in the way tree branches form or split. Main trunk will grow until it produces a branch, which creates two growing points. Then one of the new stems branches into two, while the other one lies dormant. This pattern of branching is repeated for each of the new stems. Root systems exhibit this pattern. Shells, guys. Shells. This is a shell. This is a hurricane. The unique properties of golden rectangle provides another example. Okay? This is logarithmic spiral. Logarithmic spiral. You can read about it in mathematics. And basically this logarithmic spiral is very, very similar to a shell. Snail shells, for example, follow the logarithmic spiral, and your inner ear also looks like a shell. It can also be seen in the horns of certain goats and the shape of certain tarantula webs, spider webs. Okay? This one. Hurricanes. This is a satellite reproduction of a hurricane over our planet. And look what it represents. Tarantula web, house of Nenad. Yes, the web is my home. The web of confluence points and Fibonacci ratios. Look at this, guys. Compare these pictures. Picture of the hurricane from a satellite perspective, then picture of a shell and logarithmic pattern. Do you see the resemblance? Everything in universe is connected. How do we draw these retracements? Always from left to right. The logic behind this is from the past to the present to give us future movement. From the past to the present, guys. Not from right to left. It's not proper. You always need to look in the past, connecting it with the present to give us future. In uptrend, you place from left to right, from bottom to top. In downtrend, you place from left to right, from top to bottom. Always remember that. 38.2, 50, 61.8, 78.6, 88.6. These numbers should always be present on your charts. Always. Retracements or C's are percentage of AB move swings. C equals to AB. Fibs are drawn from A to B, always. A to B produces C, which will give us future D. A is always 100, and B is always 0. Okay? Forget this. Use it like this. A, B, C, this is a wave, and D. Okay? A, B, C, mini retracement, D. Same. But this just represents a mini wave within a major Fibonacci move. Okay? Always from A to B, always from past to present, always from left to right. I will show you how to exactly draw waves later on a live chart. A is always 100, B is always 0. Uptrend from point A to point B. Look at 88.6 in this example. From A to B, guys. A, B, C, D. 88.6. Watch at 78.6 reaction. And watch reaction 61.8. Not that big compared to this one. And I don't take mini swings now, because Carolyn, when you're doing analysis on 1 hour and 4 hour, you want to take major swings into account. This is not correct swing. This was just a part of this major swing, because you need to find ultimate support. Well, I know, because there is a part of practical naked trading. We will cover that during time. Don't hurry. Don't be in a hurry. We will cover that. You need to flip your charts to the left, observe this level, see how many times it rejected in the past, see if it's an important pivot point, and so on and so on. That is the time when you can decide that this is indeed point A, because this is point A and this is point B. This is nonsense here. But look at 88.6 rejection. That is the point of this picture. 88.6, the number. I call it the number because it is the most powerful one. Where the price reacted, AB, major swing. Inverted head and shoulders failure. This is inverted head and shoulders failure. Point A, right shoulder top. Point B, major swing down, bottom. AB, where is the C? 88.6 rejection. Now just place your Fibonacci's and watch the power of 88 and 78, especially 88. Fib retracements is very useful for confluence points and swings for trend entries. Price needs to pull back for proper entries. Unless the trend is very strong, you need to wait for a deeper pullback. Always. Pullback within a trend is called a loss of momentum. It's called retracement. Avoid newbie mistakes because retracement is a part of a trend. This is a swing. This is retracement or so-called correction. This is the time when we want to position ourselves in the market. We don't want to trade here or here, here. We want to trade here. Just a hypothetical example. You want a loss of momentum, pull back within a trend, and then bang, you go for an entry. MACD is very helpful for traders who cannot find retracement, and MACD will be used in our price action trading school because I use it, and my MACD cam is showing you histograms which can identify retracement within a trend. We will get to that lesson, but now we need to cover this first. Now remember, guys, you need to really learn every single lesson here in price action trading school. And if you don't do that, it will be hard as this school is progressing, and ultimately, guys, we will do charting together after price action trading school is over. We will cover lessons about practical examples of everything we have covered in that time. It will take time until we are finished with trading school. As I said, it will last for a full year. But then again, you need to know every single lesson because we will use that for advanced trading and actual price charting, which will happen after price action trading school is finished. This is a strong trend here, and you can see this justifies our previous statement that 23.6 is used in big trends. Yes, Goran, this is double bottom, but also when you see that the price is rejecting 23.6 within a big trend, that is the time to turn into lower time frames and scalp, because scalping is done with very high momentum in a strong trend. You cannot position yourself here. You can scalp here. Position trading should at least get to this point. 38.2 previous swing and breakout point. This is the time for positional trading. This is the time for scalping trading. Zach is saying, can you explain more about this trading school? Zach, we already covered 3 lessons. This is 4th lesson within our trading school. And price action trading school is my, I can say, a project within Admiral Markets, where I teach you everything you need to know about price action trading. You need to cover every single lesson, because every lesson which I have been talking about and will be talking about will be used for future charting, for future advanced trading, and for charting which you will do after we finish with school. This trading school will last for a full year, because we have a lot of things to cover. So if you're first here, previous classes you can find on Admiral Markets channel. I will show you now the link, and then I will proceed with webinar. So price action trading school, for all of you guys who missed it, we have a channel within Admiral Markets on YouTube dedicated to price action trading school, and this is the link. You can follow it there. So pay attention to this trend and look how the price reacts to Fibonacci ratios. Strong trend, then 50%. Trend is getting weak, but it's still strong. And look at this. Very, very strong trend. Double Fibonacci confluence can be used in strong trends. I used it from time to time, really, but to be honest, I don't use it now, because I use 4-hour time frames, and for 4-hour time frames, you don't need double Fibonacci confluence. I use double Fibonacci confluence on 1-hour charts, where first Fibo is weekly Fibo going back 7 to 8 days in the past, and second Fibo is intraday Fibo. As you can see, from time to time, I use 1-hour analysis, which is indeed intraday analysis, but I also use 4-hour analysis, as I do with recaps, for swing trading opportunities, and for that we don't need to use double Fibonacci confluence. So the practical example, this is an example of double Fibonacci confluence. You go with the weekly swing, then you go with intraday swing, and you get these confluence points, because those ratios are sitting at top of each other, as in this example. Weekly Fib, daily, intraday Fib, and you can see the confluence here. So you can use it. It's helpful, especially during intraday analysis. Now Fibonacci expansion. It's used for 3 main reasons: to determine the distance of 1, 2, 3 pattern, to find possible support resistance zones and confluence to support resistance levels, and for taking profits or closing of positions. Fibonacci retracements are used to take a position in the market, but expansion is used for closing of a position or taking profit. Sorry guys, screen got frozen, okay? Okay, thanks for reminders, Ella and Nat. Now we are back to screen. Everything is good now. So double Fibonacci confluence, I explained it. First Fibo, weekly Fibo, second Fibo, intraday Fibo. And you can see it here. This is intraday Fib with weekly Fib, confluence points. The ratios are stacked, and basically they're stacked, sorry, and basically they're providing confluence points. Here also, weekly Fib, intraday Fib, and these are confluence points. Okay. Fibonacci expansions are used for 3 main reasons: to determine the distance of 1, 2, 3 pattern, to find possible support resistance zones and confluence, and take profits. This is the rule. Fibonacci retracements are used to take a position in the market. Expansion is for closing a position or taking profit. A plus B is the same as A is to B. So A plus B is to A as A is to B. A plus B equals the distance between this. And this equals to same as A is to B. Again, past plus present equals to future. Three most popular points used in expansion indicator are 61.8, 100, and 168. 61.8 is a key Fibonacci level. 100 does not form a part of the Fibonacci sequence, but is derived from Elliott wave theory of a measured move. A measured move takes advantage of the fact that wave C will often move the same amount that wave A did, but maybe at a different angle. 168 represents the total distance before reaching from point A to point B. Simply put, guys, it's 1, 2, 3 pattern, and we have 1, 2, 3 wave in it. So 1, 2, 3, bullish N or bullish inverted, bearish inverted N. N, inverted N. Bullish, bearish. Carolyn is asking, do we manually plot extension lines in the retracement Fibonacci, or you use Fibonacci extensions from MT4? You use Fibonacci extensions from MT4. I will show you how to do it. So black is Fibonacci retracement, red is Fibonacci expansion. Okay, this is Fibonacci retracement, black color. Red is Fibonacci expansion. Okay. Pay attention to the screen. Retracement for finding an entry. Once we placed our entry, we put extension to show us the target. Usually first, second, third target. From left to right, always. From in downtrend, from point 1 high to point 2, which is swing low. Point 1, point 2, point 3, let's say. Okay, point 3 is entry point. You need to adjust it. So once you see this, you need to move this point to your entry point. I will show you on live chart, and you will get extension. Okay, same for uptrend. Point 1, point 2. Point 1 is swing low, point 2 is swing high, and you need to adjust. You left click on this and draw it to your entry point. Time for live chart. Australian dollar, guys. If you watch session recap, I told you to buy. I will show you now. Don't worry. I told you to buy at 72.30, 72.20. And today I said at 72.00 to 70.10 is your possible second entry point, because I was very sure that Australian dollar will go to the upside last Monday and today. So retracement, this swing, for example, rejection from 78.6. This is not a coincidence, guys. Place an inner trend line here. Look what you will get, an X cross of 78.6, an inner trend line. Why did I say exactly this zone? Okay, this was previous confluence point on Monday when we did session recap. Today this was also confluence point. And look, this giant W, we will cover chart patterns, which are also confluence points within the context of the main trend. If you traded Australian dollar, you would cover for a loss of dollar-yen trade from session recap. This was indeed a great setup. And this shows you the power of 78.6 and 61.8, because this confluence point is very close to our 72.30 from session recap. Even Chinese bad data during Asia session could not pull down the price to reach our stop loss. So this is, let's say that this was your entry point here. So let's say this was your entry point. Karen is saying to retracement line. Usually retracement line is, usually it has some of these numbers in it. Karen is saying why 78.6 not 76.4? Because I say that, Caroline. Ilya, sorry. You should listen to my webinar carefully. I explain why 78.6 is important. I don't use 76.4, 78.6 and 88.6. Remember, don't be afraid of it. You can safely put 78.6 and watch reactions at the number. Now, when you placed, this is how you place Fibonacci, okay? Now you want to put Fibonacci extension for targets. So, Caroline is saying, I guess that means I talk too much and you always think I said it. Yeah, maybe you're asking a lot of questions, but that's okay because I need to explain you. It's normal. So, Fibonacci expansion or extension, point 1, guys. Look at this, how you should do it now. Point 1, point 2, and you see point 3. Now you need to move this point 3 at your retracement or entry point, which is usually within the context of the zone. But I would do it here. And you see potential targets here. First, second, third. The biggest confluence comes within the context of a second target, 74.22. We should be the target indeed, but we will see. Okay, look at this, guys. Simple enough, right? Simple enough. Okay, let's use another example. Goran is asking. Okay, another one. Carol is saying he's not understanding this. It's low of the candle. Yes, but usually it's very close to your entry point. It doesn't matter. You could have entered at 70. Let's say that this is exactly this level here is your entry point. That would be perfect entry point, 72.20. Okay? It doesn't matter because you just place it on retracement point, not on your entry point. Your entry point usually comes within the zone, but you place your extension to retracement point. Point 1, point 2, point 3. Okay? Because this is what I teach you guys. I teach you how to use confluence. Your confluence will usually be very close to the candle swings. Okay, let's use another example. This example, okay. GBP dollar. Well, I will use this one because this is, okay, point 1, point 2, okay. Again, very close to 78.6. Look at this. Look at this. And let's say previous top, bottom. So this is your entry. Okay, again, your entry zone is usually within the constant. Now, don't be confused. We are not talking about entry points. Now I'm explaining confluence points to you. But in the future webinars, I will be explaining how to find confluence. But before we speak about confluence, we need to understand price action tools, Fibonacci, trend lines, sharp patterns, and so much we have to discuss. So let's say that this was, let's say it doesn't matter. You have entered here. It doesn't matter. Let's say you have entered here. So you need to use Fibonacci expansion for target if you use Fibonacci as target. Point 1, point 2, look. And place this to your swing point here. Because next swing supposed to hit 61.8, which is hit. Indeed. It was short of next point here. But usually the first level is hit. Okay? From this to this, it was 400 pips. Okay? So look at how the price really respects it. And in one point we will short it. I will do the analysis of pound dollar, and possibly we will have short trade opportunity. Because look at 4 hours, this is downtrend. Now, okay, we are buying. Unfortunately, our pound dollar trade hit the stop loss, as you can see. But guys, look up after a subsequent reaction. It went more than 100 pips in a profit if our stop loss was not hit. We are not talking about managing the trades, Caroline. That will come later during the school. You cannot be so fast. You need to listen to this carefully and to be focused. We are talking about Fibonacci now. Be patient. Only during the last quarter of price action trading school we will talk about entries, exits. Now we need to cover everything, and this is your book, this is your school, 1000-page book which you need to read. One more example, let's say dollar CAD, guys. Let's use previous swing within the context. Okay, this is definitely okay, this one to this one, confluence, but okay, 78.6. Look, 78.6 again. Now we can place our expansion. 1, 2. Okay, now 0.3 here. It's very close to first target, and if it breaks the bottom, second target. So this is how you use retracement and expansions, guys. Okay? This is how we use it. So summary of this. We learned about proper Fibonacci placement. We learned the nature behind the power of golden ratio and sequence. We learned about expansions. Your homework is you need to practice drawing Fibonacci. You need to practice drawing expansions. You need to focus on 88.6. And next week we will have, next to come is in 2 weeks, chart patterns schematics. We will cover all of these chart patterns which will help us to define either a trend or an entry point in our future lessons. So I remind you again, this is my project, and because I have developed it, I want you to pay attention to this carefully. Listen to webinar 100 times if you need to do that. Because all of this, what we have been talking about and we will be talking about, will be used in later stages of the school. Okay? So guys, if you don't have any questions, we can conclude the webinar, call it a day. Of course, every time these webinars will be comprehensive because we need to go step by step. You cannot learn to trade from PDFs and from systems which are sold over the internet. You need a live explanation of everything when you want to trade. And that's why you have me and Chris to help you with your trading and trading decisions. Okay, great comments, Nat, Ella, and Caroline. Do you think euro down trade is almost over? We will see. Currently, euro dollar is buy, as I suggested on session recap. But I think in the last quarter of December, there can be a sell close to New Year. So pay attention to that, of course. Guys, of course, sign up for more webinars as always. I'm waiting for you tomorrow with Chris and on Monday for session recap. And our last trade was buy 1330, 1340. If you remember our webinar, session recap, which I will show on Monday. At this time, guys, do not think a lot about euro, dollar, pound. Think about these lessons. Think about how you should place Fibonacci, how you should do your homework. Because if you don't know how to place Fibonacci, you will not be a good price action trader. This is very important. Thank you for listening. I will be here with you soon. And as I always wish you, trade safe. Cheers.